Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus and to this video, which is the third part in the series of the videos on Double Taxation Avoidance Agreement. This video is about tax planning and tax benefits one can claim through DTAAs, which are agreements that India has signed with around 89 other countries to avoid double taxation and to help avoiding levying taxes twice on the same income. This provision helps taxpayers accumulate income savings by paying the tax in only one country. In this video, I'm going to explain the advantages of double taxation avoidance agreements and what are DTAA rates, which I will explain with the help of some examples, and I will also cover some important topics like the documents that are required for claiming benefits of DTAA. So make sure you watch this video to the end so you don't miss out any important part of this video. But before we begin, I would request you all to please subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on the subscribe icon and like icon, and you can share it with your family and friends and in the WhatsApp groups in your phones. I will just take a quick pause for 5 seconds so you all can take time to click on subscribe icon, like icon, and also click on the bell icon that you will find below the video. Please do that while I wait. Okay, so now I'll quickly introduce myself for the new viewers. Here I am, CA Ashima, a professionally qualified chartered accountant, a certified auditor, and a certified ERP implementation specialist specializing in tax, finance, IT, and audits. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational and have catered to clients in Sweden, Finland, Norway, Denmark, and the UK. I have also worked as a freelance financial consultant. Now let's understand what are the advantages of DTAA. There are many advantages that can be availed under the double taxation avoidance agreements. The main intention of DTAA is to make the country attractive for investments by offering tax benefits while avoiding double taxation. For example, if an infrastructure company from one country invests in another, the question arises, where will the company pay taxes? The DTA agreement between countries ensures that there is no double taxation. The agreement ensures that the non-residents or a foreign company will effectively pay taxes only in one country, and hence there will be no double taxation. Another advantage is the legal certainty. There is a legal certainty in DTAAs as there are specific rules for applying taxes on international income. DTAA also ensures that the benefits are applicable to only genuine residents of two countries by implying anti-abusive provisions. Concessional tax rates known as DTAA rates can be offered in some cases as per the provisions of DTAA. Now let's understand what are DTAA rates. Double taxation avoidance agreement signed by India with different countries fixes a specific rate at which tax has to be deducted on income paid to residents of that country. This means that when NRIs earn an income in India, the TDS applicable would be according to the rates set in the double taxation avoidance agreement with that country. Let me explain with the help of a very simple example how the relief is provided under the DTAA on interest income earned from NRO bank account held by an NRI in India who is a resident of a foreign country, let's say USA. For example, interest earned on the NRI bank deposit attracts TDS of 30%, but the tax could be deducted at 10 to 15% depending on the DTAA between the two countries. India will be considered as a source country and hence interest income shall be taxable in India. In addition, NRI being a resident of USA, the same interest income shall be taxed by USA as a resident country. Let's assume the actual tax liability on NRO interest is of rupees 1 lakh. In the given example, we can see Tax is calculated at a concessional rate of 15%, which is prescribed in DTAA between India and USA, amounting to rupees 15,000. And in the US, which is the country of residence, interest income is taxed at a local applicable rate, which is 30%, amounting to rupees 30,000. But the credit for taxes paid in India amounting to rupees 15,000 can be claimed as a deduction from tax payable in USA basis the benefits granted in the India-USA DTAA. Therefore, the total tax payable by the NRI in India and the US is rupees 30,000 only, thus avoiding any double taxation. Now let's understand how to avail the benefits of DTAA and what documents are required for claiming DTAA benefits. Initially, you need to check the DTAA between your residential country and the concerned country where you have a business set up or where you have your source of income. Next, you must submit the required documents to claim a tax credit or exemption. If you are an NRI and looking forward to claiming tax benefits in India based on the tax you are paying in a foreign country, you need to submit the following documents to the tax authorities in India. The taxpayer will need to submit the documents to the tax deductor. The first is self-declaration cum indemnity format, self-attested PAN card copy, OCI, which is Overseas Citizen of India or Person of Indian Origin proof only if applicable, a copy of visa and passport, tax residency certificate, which I have explained in my first video in detail what a tax residency certificate is. NRI will also have to file Form 10F, which can be taken from any bank or downloaded from the income tax website. Here, the taxpayer will have to fill the mandatory details like nationality, tax identification number, address, period of residential status, etc. Proof of tax paid deducted in foreign country in order to claim the foreign tax credit. If you want to claim tax benefit of lower DTAA rates under the DTA agreement, you must submit the TRC, which is Tax Residency Certificate, to the deductor as well. Under sections 90 and 90A of the Income Tax Act, you must apply for the tax residency certificate by submitting Form 10FA. Your certificate will be issued under Form 10FB once the verification and application processing gets completed successfully. If you need to apply for the TRC in India, that is, if your tax residence is India. However, if your tax residence is in some foreign country, like in my case it was Sweden, so in my personal example that I used in part 1 and 2 of the videos in DTAA series, then you would require a TRC from tax authority of that foreign country and need to submit it to the Indian Income Tax Authority in order to claim your foreign tax credit. So in my case, I obtained it from Swedish tax authorities. So friends, this was part 3 of the series on DTAA. To know more about other FAQs on double taxation avoidance agreements, you can watch my other videos in this series. You can also watch my other videos where I have shared information about the tax benefits for returning NRIs that comes with RNOR tax status and other tax benefits for NRIs on sale of house property in India and many other videos related to financial planning and investments, which are not only relevant for NRIs but also for others as well. So friends, now it's time to wrap up this video and I hope you all will benefit with the information shared in this video and I hope you liked the contents of this video. I request you all to please click on the like icon and do subscribe right now if you haven't done that yet. You just need to log in with your email ID on YouTube to subscribe. That's it. It's totally free for all. So do it right now. Subscribe, like and share. Share it with your family and friends and do share it in the WhatsApp groups in your phones as well. Thank you and bye-bye.